Hey guys, it's James and I'm back with another comparison video of QYLD versus another income ETF. This is a lesser known income ETF that has only been around for 4 years, and we'll take a look at the fund page. But what they do is they buy the Dividend Aristocrats in the S&P 500 and write call options on them and then give back to you the profits from the premium and pay you in a dividend. Then they also have a pretty decent annual growth rate. So we'll go ahead and take a look at what these funds look like compared side by side if you were to reinvest dividends, not reinvest dividends, and then what it would look like with a smaller portfolio over the course of 10 years. But before we do that, I want to take a look at each of the fund pages websites, go over to Seeking Alpha and see how we got this CAGR number, and then go to Portfolio Visualizer and see how these funds would have fared compared to a $10,000 investment from the most recent fund's inception date. Over on QYLD's page, I'm sure a lot of you have seen this already. Their fund inception date was December 2013. The current 12-month trailing yield they have on their website is 15.17. So we will use this number in our calculator. We will also use 0.60% for the expense ratio. The only website that I could find for KNG was this right here from First Trust. A few things to note here. The expense ratio is a 0.75. The inception price was $40, and we will use that, and its inception date was March of 2018. Coming over to Seeking Alpha, QYLD's page, taking a look at their overall history or their overall market price data. They started at around $25, and if you drew a straight line from the beginning of the graph all the way to the end, we will determine an average CAGR number over the 8 years and a quarter history. We'll do the same thing for KNG, but you see KNG has had some growth since March of 2018. They started again at $40, which we saw there on their fund website page. They started at $40, and today they are sitting at $54.71. However, their dividend yield is not as impressive as QYLD. Their current dividend yield is sitting at around a 3.71%, with their expense ratio at 0.75%. So we will use those numbers in our determination for our fund versus fund calculator. Coming over to Portfolio Visualizer, we'll take a look currently with the dividends reinvested for QYLD versus KNG. We'll analyze the portfolio and see what we would have gotten starting March of 2018. This was the fund inception date for KNG, so that is our starting historical comparison value starting March 2018 with $10,000. It looks like KNG would have outperformed with dividends reinvested. The overall CAGR number for QYLD in that time period would have been 7.1% and 11.56% for KNG. Without dividends reinvested, we take a look at the growth and we see that again would have outperformed QYLD with an overall CAGR number for QYLD being a negative 4.2% in this time period of March 18 to about March of 2022. And then KNG without dividends reinvested would have had a 7.47% CAGR in this time period. Now, since we did not reinvest dividends, let's take a look at what our income or dividends would have looked like. And we know QYLD would have depreciated, but our dividends from our $10,000 investment would have been $800 starting in 2018 for QYLD. And it looks like it would have continued to go up to where we are today, with the most recent full year being $1,200 from QYLD, even with that depreciating asset, and $366 from KNG. So now that we know a little bit more about KNG, taking a look at their dividend yield and their annual growth, they do say it is an income fund. However, it does only pay a quarterly dividend at a 3.75% dividend payout. So your dividends are not going to be that high you would have to have quite a significant amount of value in your portfolio to be able to live off the dividend from KNG. If you recall those numbers from Seeking Alpha here on our CAGR calculators, the starting value for QYLD was 25 for a total time period of 8 years and 3 months, so 8.25, with the ending value being 28.7. This gives us a cumulative CAGR number for QYLD over the course of the fund history to be negative 2.22%. And the same likewise for KNG for a 4-year history gives us a cumulative annual growth rate of 8.15%. Putting those numbers into the graph with dividends reinvested at a high portfolio value or relatively high, we can go a little higher, but we'll just start with an average of $350,000. This is what you would have with QYLD versus KNG. Fairly decent, fairly the same. However, QYLD is being held up by its large dividend payouts, as we can see here from the income graph. And remember, we are reinvesting dividends. So the only reason why QYLD would outperform KNG is because of the large dividend payout. And this is with that 15.17% dividend yield. If you do not expect a dividend yield that high over the course of the next 10 years, then of course QYLD would drop. Let's say QYLD's dividend yield averaged closer to about 12%, then QYLD would underperform KNG over the course of the next 10 years. Let's keep it as it is, 15.17. And then change our reinvesting dividend selection and say we do not want to reinvest dividends. And then you can see QYLD will fall short over the long term. You would have a depreciating asset. $350,000 would turn into something like $263,000 if the fund continued to drop over the next course of 10 years, as it has in the past 8 years. Whereas KNG would go from $350,000 to $710,000 if over the next 10 years it performed like it did over the past 4 years. And this is the income that we would be receiving. We would be pulling out of our funds. So even though you are pulling your money out of your KNG fund, you would still have an increasing year-over-year dividend growth rate. With QYLD pulling out these dividends, you would have a decreasing year-over-year dividend payout. Let's go ahead and change this to a smaller investment. Let's say you only had $10,000 and you wanted to be able to pull your investment out and see what you would have. Your $10,000 with QYLD over 10 years would be $7,500. With KNG, your $10,000 would be $20,000 over 10 years. Obviously not the best. Now this is the type of income you would be receiving, not including taxes. QYLD, your $10,000 would be getting you a little bit, somewhere between $1,000 and $1,500 every year over the course of the next 10 years. And KNG would be getting you about $400 to about $700 per year over the course of the next 10 years. So with that, head down to the comments and let me know what you guys thought of this. If you want to see another video where I compare 2 different income funds, growth funds, any type of stocks or ETFs compared side by side in this manner, head down into the comments and let me know which one you want to see. And with that, thanks for watching.